Okay, so let's do a quick take for June 2021 now that that's in the books. I'm Steve Wolf, and there's been a lot of good news in the last month. Matter of fact, there's been a lot of good news over the last, probably over the last year, but certainly over the last few months. With COVID kind of going away, there's more people getting vaccinated. There's been a lot of reopenings in the economy, and the earnings have been good. So it's been really a good time to be in the stock market. The market is still favoring, though, the rotation into the pandemic recovery plays. So those stocks that kind of lagged last year have actually caught up a lot this year. It might even be slowing down just a bit, but June was a good month for that. Financials and energy continued to lead the way, with tech stocks actually being a little bit further behind, although everything grew a little in the last month, so it's been good. Let's talk a little bit about inflation, because in the middle of June, there was a pretty good sized dip in the market, or I say a pretty good size, probably 5, 6, 7%, and people got a little bit nervous because all of a sudden bonds were spiking up in yields, and people were getting afraid because of inflation. And if you take a look at oil and food, and it's really kind of funny because when the economists talk about inflation, they do X oil and X food, which means without those, which makes no sense to me. I think that's a bunch of bull hockey, because for anybody who actually likes to eat and goes to the grocery store, they know that food is way more expensive than it was just a few months ago. And if you are not on one of those battery operated cars and you have to go to the gas station, you know that you're paying a lot of money for fuel that you weren't paying before. So inflation is real in your pocketbook, even if the economists aren't including that. Crude oil prices are up to $75 a barrel. And that's the highest they've been since 2018. That's pretty high. In the U.S., it now costs more than an average of $1.02 a gallon more than it did just a year ago, according to Gas Buddy, which analyzes fuel prices. $1.02, it's a lot. So if you were paying maybe $3 last year and you're paying $4 today, that's a 33% increase. So I don't know about the economists, but I think that's inflation in my pocket. There's also been a shortage of semiconductor chips. And that's really causing some havoc, because semiconductors are in everything we have. I mean, from toasters to ovens to microwaves to computers to cars. As a matter of fact, the auto industry has really been hit the hardest, because they can't finish making a car without computer chips. So companies like Ford, Volkswagen, Jaguar, they've all had to stop production because they just don't have enough chips to supply those cars. And right now, demand is far outstripping the supply of computer chips. So those computer chip companies are probably happy, because as soon as they have a chip, they can sell it. And generally speaking, supply and demand means they could probably raise the price a little bit. So those companies probably are doing very well. Now, looking at the market for the first half of this year, it's actually, some people might call this a Goldilocks market, and we've heard that many, many times in the past. I call it a duck market. Why? Because, everything is really ducky right now out there. I mean, you almost couldn't ask for a better market. Now, I think there's going to be continuing to be bouts of volatility as we go. But if you're looking forward a little bit, I really think that stocks are still the right place to be, because the reopenings are there. Anybody who wants to get a job can get one. There are help wanted signs all over the country. Unfortunately, some people, I guess, are still staying at home because they're getting a little bit more money to stay at home than to work. But eventually that's going to run out, and those people are going to get jobs. And I think employment will get back to a pretty good level. Matter of fact, I think tomorrow there's an employment report coming out. Today is Thursday, July 1st, so you may not see this until July 2nd. We'll already know how the job market came out. But my guess is that as we continue to go into the future, the job market will continue to get better. So for all of you out there who are wondering what you should do, I still think that stocks are the right place to be. I think they're better than bonds at the moment. If yields do spike up, bonds will go down in price. It may hurt stocks a little bit too, but that's a ways down the road. I still think we've got quite a ways to go before that ever happens. So thanks for listening. We'll see you next month.